Welcome to Her Enterprise with me, Melissa.
Hey, and me, Kelly.
And it's me, Nicole.
Join this group of
entrepreneurial women building community and masterminding through our problems.
So we can all
lean into your values,
cut what doesn't serve you,
and grow in abundance. Let's get to it, changemakers. Hi, welcome to Her Enterprise. This is Kelly, and today I'm here with Melissa.
Hey, how are you doing?
Good. And Nicole.
Hi, Kelly. How's it going?
It's going great. You guys, I'm so excited. Today I get to introduce you guys to my favorite tax guy that I unreasonably rave about. Like, I don't know. I get so thrilled about working with Tony, and it's been really fun. So I can't wait for everybody to meet Tony. Tony Clark is an enrolled agent. He's been doing taxes for 22 years and just has been a game changer. He's taken like an area that I have dreaded in the past and just helped me like up level it. And people are like, what do you love about Tony? And I was like, I never feel judged because I feel like I'm the scattered creative and he makes sense out of my like scattered creativity. And then he's always helping me like up level. He meets my like competitiveness where I'm like, how do I do better next year? And he's super responsive. And I always call him one of my favorite team members in my business. So why don't you say hi, Tony, and let us know how you're doing.
Hello, and thank you for that, Kelly. But I'm your favorite tax guy. Come on.
I mean, you're my only tax guy, but I like sent last time we met, we did like a review because we had like 4 months. We did our tax planning. So Tony's also a tax planner, and we had like 4 months this year. My husband and I neither of us were working, so we had to like regroup our tax plan, and I took a selfie when we were there to all my friends. I was like, you guys, I know this is really ridiculous, but I get to meet Tony, and I like schedule it for my birthday because it's like, all right, even if I have to pay taxes, it means I made enough money to have to pay taxes. So
that's the truth, Kelly. That is the truth. So many people complain about paying taxes, and listen, we all want to minimize what we pay, but if you're making money, if you're paying taxes, that means you're making money.
Yeah. So I loved it when our like first time we met, I was like, you told me you do tax planning, and I was like, what is tax planning? And I don't think people recognize the difference between like a tax preparer and tax planning, and then maybe any other like services you offer. Can you tell us a little bit about that?
Sure thing. So for us here at Capstone CPA Group, tax planning is a part of tax preparing. And I hope that makes sense once I get through here. A tax preparer, if somebody is simply preparing your taxes, you print off your W-2s and hand them some other numbers and statements that say important tax documents, and they shove those into a machine, tell you how much you owe or how much your refund is, and say, well, I'll see you next year. That's just straight up tax preparation. What we try to do is spend the year planning so our clients and individuals can make decisions throughout the year, spending money in certain ways or not spending money in certain ways to minimize their tax effect from year to year. A typical tax engagement involves a pre-meeting, a dropping off of the tax documents, a review, a discussion around those tax documents, and then when the tax return is done, everybody sits down in a room, we go over the tax return, we see what happened, the good and the bad, and we discuss why it happened, because education is 90% of the battle here. If everybody's on the same page, me and my client, we're going to get so much further. And then we finish up with a really good question. Hey, what's going to change this year? What's going to change 2 years from now? What are your plans and goals 5 years from now? And we start to build a strategy to minimize the tax effect and maximize cash flow for that period. The services that we offer is tax planning, tax preparation. We work with individuals and businesses, so we offer the full business services suite. We do bookkeeping for clients. We have payroll services. So as your business grows and you need employees, we're there to help.
Okay.
That's it in a nutshell.
That's amazing. That's a lot of offerings, and it's just wonderful to know that's all available right here. And I know your email address now. I know how to get a hold of you, Tony. So watch out. I just so for our audience, of course, where Her Enterprise podcast is about women in their first 1 to 3 years of business. So my question is about when you're first starting your side hustle. Usually you start small and then you grow to where you need employees eventually, right? So my question was, when you're starting a side hustle, what would you recommend one of the best ways to file? And I know this is really personal, but would it be as a sole proprietor, a partnership, LLC? Can you give us a little bit of feedback or information on how to file in the beginning?
Sure. Well, there's really like two ideas going on here. So if you have one person who is starting this business, then they would start out as a sole proprietor. They might just have a DBA or a doing business as, but that's a sole proprietor. Now, anytime you have two or more people, then you're required to file as a partnership. File a partnership return, you split the income and deductions, however the partnership agreement is written up. Now, an LLC is a separate thing altogether. And it really does not affect us from a tax standpoint. A LLC is a creation of the states that provides legal protection for your business. I'm not an attorney, so I'm not even going to dive into all of that because that'll only get all of us in trouble. But if you're going to form an LLC, I recommend you speak with your attorney. But from a tax standpoint, if you have one owner of an LLC, a single member in your LLC, then you are taxed as a sole proprietor on Schedule C on your own 1040. If you have two members in the LLC, then you're taxed as a partnership, and you would have to prepare a partnership return. So I would say what I usually see and what makes a lot of sense to me is individuals starting as a sole proprietor. If there is something within their business that makes them think they may require one of two things, either protection of their assets or they have a name they want to protect, a business name that they don't want anybody else to use. Those are two great reasons to form an LLC. Did we get there?
Yeah, no,
That was perfect. Thank you. That was wonderful.
yeah. And that was, I mean, I feel like everyone, maybe not Kelly, but I saw Nicole and me, and we were like, oh, like it was so revealing that an LLC isn't even really in the same boat as everything else when it comes to tax time. So thank you for sharing that.
You betcha. And if I could, so many times business owners talk about, hey, Tony, I got my LLC. I'm being taxed as a sole proprietor right now, but I want to be an S Corp. To the IRS recognizes that individuals may want to change how we want to have ourselves taxed for our business. So they offer up some regulations that allow us to fill out a couple forms, and we can transition that LLC to be taxed as an S Corp. without creating a whole brand new business. It still remains an LLC, but the IRS views it as an S corp.
Well, thank you for sharing with us that top level. I know I just learned something, and obviously it raises new questions. But I'm sure some of those are too specific. So I did want to ask, though, I mean, it sounds like you have experience working with small businesses, and so people who would be entrepreneurs. What are some of the big mistakes that they make when it comes to managing their business for taxes, and how can they avoid it?
I would say the biggest one of the mistakes that I see is that these individuals may fail to plan for their success, or even another side of the same coin is failing to plan for their failure. What I often see, that was the Tony Clark pause. So let me give you an example. So let's say that Sally started her business, and she's just going gangbusters in 2019, right? Just going whole hog, making all sorts of cash. 2020 comes along, and it's tax preparation time. She hasn't planned about what she's going to do with this money. Matter of fact, she's spent most of it. Pandemic hits, no more income. She has to file her taxes, big tax bill due. She didn't plan during the year what she was going to do with that cash. She didn't plan for taxes, and she didn't plan for the future. What will happen if it fails? You know, the pandemic's out of her control, and she may not have seen that coming. I know I didn't. Those are the kind of things that I see. It's failing to budget, if you will, for certain contingencies. That, and then growth is sometimes really hard as your business starts to grow. When do I hire? How far can I go? What can I afford? I'd say those are the problems that I see the most. I get a lot of sad people across the table when they don't have the money to pay their taxes. Not a lot, like four.
But it's memorable, right? It's memorable when you're not ready. It's hard.
It is, and there's a big difference between telling somebody they owe $20,000 in taxes on April 15th versus a year before saying, hey, listen, we're going to need to put aside a couple $1,000s every month for taxes. And so that way they come into April 15th ready to roll. Big difference.
I like that. I like how you gave the number example and broke it down, saying, so the mistake there is not budgeting and setting aside money so that whether they owe something or not, at least they're ready to handle it.
That's right.
This is not on the questions, but so it sounds like you're a proponent for quarterly taxes. Do you recommend that? Can we talk about that?
We can talk about that. I mean, a proponent, that means I'm out there walking the street telling
Yes, do it.
It's more like quarterly taxes are required. And so in that way, I am a proponent, for sure. If we don't make our estimated taxes, our quarterly estimates, then come the end of the year, there's going to be underreporting penalties and all that fun stuff, maybe a little interest. Side note, I usually see the states have higher rates of penalty and interest. So we always try to take care of the states first if there's only so much cash to go around.
I love this. Okay, so when people are just starting and maybe they're making a little bit of money, but they're not sure, are there certain like break points or limits of like when I need to like formalize my side hustle, or when I need to start filing taxes? Like, is it like if you make more than $600 or something like that, you need to count it? And then
it's right from the get-go.
Okay.
From the get-go. Any income must be reported. But the other side of that is any reasonable expenses in the pursuit of that income may be deducted. So, if you're running your side hustle and, of course, that first year it's hard maybe to turn a profit as you're laying out some money to make that money, and you end up with a loss, hey, that's okay. As long as it's real, right?
Yeah.
You really spent the money, and it'll reduce your overall taxable income. Yeah, I'm a big proponent of, we're putting it all on there. We're playing this game straight. And I bet you thought I was going to say I was a proponent of quarterly taxes. But if you are making a run at a business with your side hustle, you're going to have expenses. Well, let's claim those expenses.
Yeah. I can't tell you how many times throughout not as much anymore because I think maybe you've trained me well, but I like before where I'd be like, oh, can I count this? Or how I would try and get like creative, just use my creative and sometimes with creativity. And sometimes when it would go like maybe a little bit too far, I'd like be grounded by hearing your voice say, just play it straight, Kelly. Like, just play. And it wasn't even like any malintention. I was like, oh, can it be this if I do this? And then, obviously, if it was something to consider, I would tell you about it. But usually I would just come back to like, I'm overcomplicating it and just play it, like just play it straight. And that's always been a great comeback.
Yep. It's all gonna work out in the end.
I like that.
Okay, so you were talking just now about startup costs and taking losses if you're just starting your first year. You're making income, but then you're spending just as much or more because of how you're trying to grow. When I'm writing off startup costs and taking a loss, how many years can I hold off on reporting? If I have a low income year coming up, should I wait? So I think what I mean by that is, do you always take the losses the year that they happen, or do you sometimes spread that out?
There's one thing about taxes is things are very specific to the year in which they happen. Every year is an event, and what happens within that event is reported within that event. So this year goes on the form for that year. So to that end, you would report those startup costs. Now you do have options with things like startup or organizational costs. I get to use a tax term, so I'm smiling over here. You get to amortize that if you want to. And amortize is like, rather than take all of the expense at once, you take it over the life of that asset. So these startup costs are an asset, an intangible asset, but an asset. So you can take those over 15 years. That's what the IRS has said. You get 15 years. So you can imagine that really spreads out a little tiny expense each year. I don't know, to that end, that is one of those things where you have the conversation as you're having your taxes prepared. And should I do it now or should I amortize it over 15 years? And a lot of that depends on where the business is headed and when. I kind of think you would want to take that expense sooner rather than later.
Just, I guess, digging a little deeper in that is, if you don't start turning a profit by a certain amount of time, then it's considered a hobby, right? Like you can't, if like at some point you have to make the business successful or profitable.
Mm-hmm.
And so would you amortize to make the numbers look better, or how many years do you have, if that's correct, or if it's misinformation? You can knock down that myth right now to turn a profit.
There are the hobby loss rules, and I'll just leave that out there for everybody to go ahead and Google hobby loss rules, just so you kind of have some background knowledge. But the gist of it is you need so many profitable years within a certain period. But that's not the total answer. I mean, if you're running a legit business and you just happen to lose money for 6 years in a row, but it's legitimate and you're running it like a business with the intent to make a profit, chances are the hobby loss rules are not going to affect you. Mm-hmm. The IRS would look at the facts and circumstances, and you would lay it out in front of them as such. So as far as the startup costs, it kind of depends. I mean, maybe you had startup costs of $100,000. Well, maybe then it really does make sense to spread it out over a certain amount of time. Matter of fact, you might be required to. But if you had startup costs of just say a couple $1,000s, then why spread that over 15 years? That's not tax advice. That's just me.
Right.
Well, thank you for continuing to shed light on this dark cave of taxes for some of us. It's so great to have a light shine bright on all those little spaces.
It's fun to be able to talk about it, because when I go home at night and we sit down at the dinner table, my wife and my daughter, they don't want to hear anything.
What is the matter? How come they don't want to talk? No, I get it. I completely get it. This is a question, actually. My friend Angel from Case Southside, go follow her on Instagram. She is a digital journalist from the south side of San Antonio, and she recently started her business. And so, whatever you can tell us, Tony, she asked this question: what kinds of things can you write off for your business if you're working from home? And I know this has changed in recent years because I've noticed it when I have done taxes. So what is your take on this question?
Okay, so there's a couple things going on here. If you're an employee and you just happen to be working from home, your employer has sent you home to work, or that's an option you have, so you do it. There's really no avenue to write off these expenses. Perhaps your employer has some sort of plan where they can reimburse you for certain things. So that's there. If you're a sole proprietor and you want to deduct for the business use of your home, I would recommend that you check out IRS publication 587. That one lays out in real nice English. It's not all a bunch of just strung together legal terms of what you can deduct. And it gives some really good examples of that. I would say this, that to have the home office deduction, that this home office has to, and these are the technical terms, regular and exclusive use for the business. Mm. So this can't be, your guest bedroom that doubles with a desk in the corner. This needs to be a legit exclusive use office. And there's all sorts of things. I mean, there is a lot that would go into the calculation of the deduction, because it is based on, let's say you have a 100 square foot office in a 2,000 square foot home. Well, that's what, 5%, right?
Yeah.
So 5% of things such as mortgage interest, property taxes, homeowners insurance. So there's a lot that can go into that calculation. So I would definitely recommend checking out that IRS publication 587.
Yeah, thank you.
And if you want a sneak peek, you can check out Form 8829, and that's the form that actually handles the calculation.
Great. Thank you so much, Tony. And thanks, Angel, for the question.
Awesome. We'll make sure we include those in the show notes.
I took notes. Okay, Tony, this is a little bit of a pivot, but cash and reporting your cash. So I talk to other business owners, and for some reason I'm baffled as to how many times I talk to people and they just don't report like cash payments or things like that. I mean, no, it's not me.
This is not me. I've been well trained by Tony.
But I always think about, I don't know, like I'm always thinking about like Social Security if I ever get it, right? Or like if I want to buy a house, whatever. But are those like good? Can we talk about reporting cash and like what people could miss out if they like don't report cash, other than the
side of a prison cell?
Yeah, prison cell.
Yeah.
Like Scout's honor. Like, what if I'm like hiding a book? Have you ever seen Marvelous Mrs. Maisel and how they like shove books? They have a second book with all the cash and that they're doing, and then they hide it in like the in-laws' house, and it's shoved in the back with a whole bunch of cash. I'm not doing that. But I don't think people always think through the consequences of like not reporting cash other than prison. But are there other reasons why maybe people should report cash? I
think that prison, that's a pretty good reason right there. Good start. Prison and fines. So there you go. You still owe tax on it. So, I mean, other reasons. Let's say someday, I mean, you pointed out, Kelly, the Social Security. I mean, that's a little something there. I can think of, like, you want to buy a house.
Yes.
You need a mortgage. You can't say to the bank, well, here's my tax return. It shows I made $4,000 last year. But really, I made all of this. That's not going to get you anywhere. Boy, when I saw that question, I thought it was like cash versus accrual. I didn't know we were going to go.
I mean, you can talk about that too.
No,
I'm talking.
I mean, it seems silly and it seems funny and it seems like something that only happens in the movies, but I think it's a good question because, and I'm going to get a little political here. I feel like that's one of the concerns that people have is immigrants don't pay taxes or something like that. And that's a big issue. But people don't think about the fact that, there's a lot of service jobs where people don't report their money. They, whether they're waitresses or bartenders or anything else where you get tipped in cash. Yeah, there's a lot of people that don't realize, hey, I need to actually report this money because that's just not what they're taught. So I think it's important that people need to realize that, oh yeah, there is a legal ramification to that, but then there's also, benefits that you're losing out on. So
yeah, from what I understand, I think it's like your Social Security benefits are calculated by your highest earning years. People should look this up. I'm Tim Allening the whole conversation, but it's your highest years. And then us looking at houses, we bought our house just based on our W-2 income. But now that I'm a stronger earner, I'm always every dollar I end up wanting to count somehow so that I'm okay, so this will help.
Yeah. And another little thing is if you want to contribute to some sort of retirement account, either traditional IRA or a IRA or whatever, you can only contribute earned income.
Yeah.
You can't put in, the money under the mattress or anything like that.
There you go.
Mm-hmm.
I guess bring this back down. That was a little intense. That was an intense section there. Are there milestones an entrepreneur should watch out for in their business? Like when is a good time to hire a tax person? And what are the advantages and disadvantages?
Personally, I think you should hire tax help right from day one. There are more than several times we've had individuals show up and they're in year 3 and they're coming to see us only because now they have a problem and they need us to solve that problem. And usually we can solve that problem and then, start down a real like yellow brick road of tax happiness right after that. But if they would have seen us from the beginning and made some of those decisions about what they can spend money on, tax planning so they don't end up in a hole. So I really think right from the beginning. Because also, we talked about it earlier. Somebody's got a side hustle. Should I be deducting this money right away? Well, yes, you should. For this reason and this reason. But a lot of it depends on an individual's particular tax and financial situation. And I can throw out tons of generalities, but it's going to come down to where is this person, where is she right now, and what would be the best course of action. A real good time, if we're going to pick a time, is when you start to think that you need extra help in your business. Either you want to hire an employee, or you might be able to subcontract some of the things that you need done. Both of those have compliance obligations, reporting obligations, and possibly additional taxes. So it's those kind of things that you might not be aware of when you make that decision about, I need to get somebody else in here.
I feel like it gives you a different way of thinking about your business too, when you are thinking about it in terms of the future and profit. And that's what the planner is, right? That's why we want to work with Tony, because then all of a sudden your business is more of a tangible thing and you're making a plan versus just, oh, do I even have separate accounts? Oh, what did I spend money on? Like it just makes you more organized and more accountable to your business, I feel like. So
yeah, there's so much that we have seen. We work with individuals and businesses. We've seen businesses in different parts of the life cycle. Somebody who started something as a side hustle and now it's thriving. Somebody who bought a business. Somebody who sold a business. And that knowledge that's trapped in our skulls, we can share that with you.
Yes, I love that. Okay, so we know that everyone has their own personal way their brains work, but do you, as a tax preparer, planner, have any favorite tools or apps you'd recommend for those of us that are tracking and keeping organized of all of our stuff? If, say, we're going to come sit down with you, what's a good way I could maybe start keeping track of things so I'm not a complete disaster when I sit in your office with you, or get online with Zoom since it's coronavirus?
Sure. First of all, I don't want the the Kroger bag of receipts or anything like that. It's a terrible way to walk into the office. Let's see, as far as record keeping, what's most important is that records are kept. Okay, the IRS doesn't require that we use an accounting software or anything like that. I've seen it as simple as one individual, they did put all their receipts in a bag, but then they, at the end of the year, took them all out, sorted them by category, took a category, added it up, stapled it, and wrote on the top the total for that category. And then that's what they brought in. That works. It works for them, and it works for me. I've seen Excel spreadsheets. I've seen handwritten sheets. The important thing is that you have a system and it works for you, because that means you'll do it. Mm-hmm. Whether that means you go out and you get an accounting software, or you're keeping receipts, or you're keeping a spreadsheet. As long as it works for you, and then you can walk, when you're ready to do that tax return, you have, here's my total income. Here are my expenses by categories. As long as it works for you. I think a real nice one to have is one of those mileage apps. I say that, I don't have one. For certain industries where you're doing a lot of driving around in particular, you're required to keep a mileage log, and these things do it automatically for you. There are several accounting softwares that allow you to do your invoicing online and get paid online. I think those are awesome, especially if you're working a side hustle or just getting started. You don't need to spend a lot of money on any kind of fancy accounting software. I would say the simpler, the better.
Yeah, I always say what works is what you do, or what you'll use.
Yep.
And then when you recommended the like mileage tracking, where you were like, you could just like swipe one way or the other, and it as whether it's a business thing or a personal one. And so I use QuickBooks Personal, and it's like a $10 a month one. And especially with keeping track of mileage, I used to like just kind of like write down, okay, it's this many miles from here to there, and then I went. But then when I would like actually track the mileage I was doing, it was way more. I like was way underestimating how much mileage I was using. And I feel like, I don't know, I underestimate a lot about my expenses.
That's a big part of record keeping, is then you realize just how much you are spending on this or that. This applies in our personal life as well. I mean, but even for business, if you're in the habit of taking clients to lunch or coffee and you're like, wow, that was just a few bucks. That just doesn't matter. Well, these things all add up. That we need to report all of our income. We might as well report all of our expenses.
Yeah. Yes. Yeah. Well, and I like what is watched changes, right? That whole philosophy of like, if I know Tony's going to see my business expense like account, right? Because you have access to it, then I'm like, all right, I guess I better be. It holds me a little bit accountable. Where like, I guess I better like be way more responsible with this, because Tony will just give me this look and a deep breath, right? Like
accountability through shame. I mean, whatever works, right?
Yeah, it's also pride. Like there have been years where you've been like, good job. So I think that's also been a fun like driver for me. So like, how can people work with you if they want to work with you? What type of people do you work with? How would you like them to come to you? Like, would you like prepared?
Well, like any tax preparer, I want everybody to show up, like they tried.
Please try.
But if you are bringing in the information for your business, lay it out like a business. Here's my income. Here's my expenses. Get it on a piece of paper, whether it's accounting software or a spreadsheet. Number one, it makes it a much more clear path to file your taxes. But it's also a tool for, each of us to run our own businesses. It's seeing, here's the money that came in, where did it go? And then the next quarter, you can also look back and see, here's how I did this quarter. How did I do last quarter?
Yeah.
Oh, okay. What changed? And year over year, period over period, gives you that opportunity. How can they find me?
Is there a website? Would you prefer us to try to get a hold of you through a website? I mean, we can share your email if you want.
The website would be awesome. Our emails are all on there.
Okay.
It's capstonecpagroup.com. We're located in Grand Rapids, Michigan. And we work primarily with small businesses, whether that's somebody who's reporting as a sole proprietor, if they have small sales, or some of our clients have millions of dollars in sales. We run the gamut there.
And you said you're in Grand Rapids. Do you only work with people locally? I'm on the other side of Michigan, and I'm interested in Nicole's in Texas. So do you work with people outside of the state?
We do. Usually not California, though. If you're from California, you know why. But we do. We have clients all over the U.S. Say that, but not every state, but they're around.
Cool. So we could work with you virtually then if we needed to, and just email you our tax records and all that good stuff if we wanted to work with you.
Yeah, I tell you, that's one thing with this whole lockdown. It's like even an old dinosaur like me, we've been forced to learn how to work virtually, and there's more and more of our clients have only communicated via Zoom or whatever.
I love it. Well, thank you so much, Tony. I'm sure you'll agree, for the record, this is all educational purposes. And so find your own Tony, hire Tony or find your own Tony and get a planner. I am so thankful for just the motivation you brought to my life and business. And I'm so thrilled to be able to share you with our community. And so thank you so much.
No, that's my pleasure.
Hey, Changemakers. We're always so happy to have you here listening along to the Her Enterprise podcast. Today's episode 018 was an interview with Tony Clark. He's a tax planner, and he shared with us so much about how we should think about our money in our entrepreneurship and in our business to maximize our tax savings. He also talked to us about the benefits and the ramifications of how you handle your cash when you're paid in cash. We'll be sharing Tony's website and his contact information on the show notes so that you can get a hold of him if you're in need of adding a tax planner to your money team. The ladies from Her Enterprise are a women's collective of knowledge, inspiration, and connection. We are changemakers. This is a podcast for the whole person. It is for you and your business. Let's grow, let's flourish, let's rise with Her Enterprise. Are you ready to be a change maker? Hit subscribe.